All right. Good morning, everybody. Happy or hope you're having yourselves a fantastic start to the AM here. Happy Thursday. And yeah, I hope you guys are all feeling sharp, refreshed, recharged, and ready to go. Um, Quiet trading day there yesterday, right? Zero action. Didn't really get any significant amount of volatility until pretty late there in the afternoon, or at least any significant type move. And we did a really good job, right? Kind of just avoiding quote unquote choppy price action there yesterday. Spent a little bit of time in the lab there yesterday and was looking at a few things that I'll keep refining and playing around with here over the next few days. Primarily the thing that I'm testing or back testing, I should say, is turning this midline on the opening range into something a little bit more dynamic. So what I threw on yesterday, I did it manually, was I set an auto VWAP to basically anchor at the open of the day. So whatever the open price is, and then to use that as like a quote unquote midpoint right inside the opening range. The pattern that I've seen there is that on fake outs lower, right? And then breakouts through that midpoint, you get a good chunk of follow through, right? And then to the opposite side, on when you get the auto VWAP, right? And then fake outs higher and then breakdowns through, you get a good chunk of reasonable follow through. So I'm going to backtest that a little bit, see if maybe that would be a way of refining the reversal, right? Or the low vol or the bearish failure, right? Or bullish failure version of the ORB. But yeah, playing around with that a little bit here in the background while I kind of look to see if I can find a bit more rhythm here. Short term, right? Still not a tremendous amount of daily range. We're still kind of consolidating off of this trend line. And we're starting to get pretty close to the futures roll. Now, the problem with the roll, right, isn't necessarily that it's going to be switching contracts. That's fine. That's not really a big deal. It's that people are going to be forced to buy and sell, right? So you're going to be forced to either buy contracts, right, in the September, right, and switch from your June position to September if it's going well, or alternatively, right, you're going to close your trade and lock in your win or your loss, right, if maybe things aren't going as you had expected. So what that means, right, is we get a lot of kind of like false signals creeping up into the futures roll because it just requires or there's just sloppier execution, right? So if I was thinking back to like what my responsibilities were like around the futures roll or trading the futures roll, it was honestly like the time of the month where the desk had its like sloppiest trading. And what I mean by that, right, is we had a bunch of rules over how much of the market volume we could be. I've said this in the past, right? We were allowed to be no more than 5% of market volume at any given time. And as we creeped up to the futures roll, we were allowed to increase that percentage just to be able to roll over our contracts, right? So let's say that we had like a normal roll environment. We'd be able to trade up to 10% of whatever the market volume is instead of 5%. And I imagine that that's a rule that's pretty consistent across a lot of trading desks. And so that it leads to a lot of like big one-off candles, right? Or some pretty aggressive moves. So we'll keep an eye on that, right? And basically maintain a little bit of sanity around that. I don't think that it's going to be the case here yet today. Maybe tomorrow, right? We'll go from trading ES1 and MS or MES1 and MNQ and NQ1 to trading the September contract specifically. We'll take a look at which one has more volume here at the end of today's session and then look to basically trade that one there tomorrow. And we'll see if there's any momentum or anything reasonable within that context. Yeah, but besides that, here, team, excited to see what the market has in store for us here today. Hopefully, we can get ourselves a nice little bit of momentum, get kind of kicking off here, and then go from there. All things considered, a relatively violent reaction to PPI and jobless claims. And so let's see basically what the story is at that point. Yeah, everything else looks fine from an economic calendar perspective. So let's start mapping things out. Let's figure out what we want to do here this AM, and let's set ourselves up for what should hopefully be a very successful trading day. So what's the count here on ES? Let's start there. Yeah, spot on, Mike. It's a 3 for 3 here to the downside. A little bit of contextual, like context here, probably is required. We're at the trend line. We've seen that trend line hold and bounce right multiple times. Probably wouldn't be too surprising for us to bounce off there again. Yesterday, although it was a bearish candle, right, still made higher highs, higher lows. Kind of looks relatively weak, right? Potentially like a bit of a bearish capitulation type scenario. So we'll call it 3 for 3 to the downside at trend line resistance. And what that does, I think, is it probably creates an environment where you can still maintain a little bit of flexibility, although it is a 3 for 3 there to the downside. It's not, or sorry, yeah, 3 for 3 here to the downside. I don't know why it takes so long to adapt here sometimes. Is that we are at trending markets, right? Or we're not at trending markets as much as the 3 for 3 would indicate, right? So we've seen price action bounce off this trend line here multiple times. We've not seen many multi-red day kind of pullbacks into it. So it is reasonable, I think, to have a little bit of flexibility to continue to trade this here to the upside. So 60-40 would be the starting point there, and we can go like 60-50. And then to the downside here, right, we kind of want to see just that trend line crack. So ORB fake out, then break down under the trend line. And if we could lose that support, right, we're going to be in great shape. That low there is going to be 59.80. And then we can go what, down 59, let's go 5,900 on the dot. So ideally, right, would prefer to see the trend line breakdown. That would be the best or the easiest indication there of trending PA. If things get sticky, right, or they get stuck, wouldn't be surprising for this to be kind of like your catch your breath moment. Or also wouldn't be surprising for this to have been the most aggressive move here of the day. And if that does come up, right, or it does kind of shape up together, maybe we just have to be a little bit patient here again today. All right. NQ, how do we feel? Similar, not so similar? What do you think? Yeah, similar thing, right? It's a 3 for 3 inside a pattern of consolidation. So again, we maintain some flexibility here. As a starting point, we're going to go 20 to 22 on the dot. right? And then to the downside here, pre-market lows 21.7, and we obviously want to see it crack down through that trend line. And so we're looking at 21.7. And then the next point of contact here is 21.5, 21.2. So we'll map it out down towards there. Cool. Makes sense? All right, I'll take that as a yes. All right. CL, what's the count here? Yeah, I hear that, Rico. I'm actually a little bit tired this morning here, too. I normally wake up before my alarm today. I got rudely interrupted by it. Yeah, we're gonna call this a 2 out of 3 here to the upside, right? So far, this pre-market price action is selling pressure, right? So 2 out of 3 to the upside with volume. Yeah, all good, Jeff. All good. And then to the upside here, targeting a move towards what 69.50. Nice. So we're at 67 here pre-market. We'll go like 67.50, 68, 68.50, 69. Nice. 69.50. And then to the downside here, so we're going to go NA. We've got trending conditions here to the upside, a little bit of a pullback, right? After a big breakout, not a big deal. We're still looking for trend continuation here versus reversals. So let's see if that can shape up. Okay, Apple under 200. 2 out of 3 here to the downside with volume. Microsoft 3 for 3 here to the upside. We'll call this a weak 3 for 3. Tesla, red candle, decreasing volume gap down, higher high, higher low. So 2 out of 3 to the downside without vol. Amazon 3 for 3 here to the downside. Nvidia 3 for 3 here to the downside, higher high, higher low. AMD, red candle, decreasing volume gap up. So 2 out of 3 to the downside without volume. Meta, higher high, higher low, same thing. Netflix, inside bar. Google, inside bar. And then the old VIX 18.08. So a little bit of an increase here in implied volatility, but nothing like insane. Let's see basically where momentum shows up here today, and then it can go from there. Obviously, base expectation, right, is consolidation until proven otherwise. We're going to want to be patient, right, to see that proven otherwise play out. But other than that, right, I am optimistic that we should be able to get some sort of tradable range here today for ourselves, and then hopefully a little bit of joy and take advantage of whatever that move is. Probably one thing that I want to get back to being a little bit better at here is just avoiding trades, right, on days where price action is kind of crappy, right? I did a good job of that there yesterday, but I haven't necessarily done a very good job of that there in the last, say, month or so. So I really want to be focusing on being proactive with days where I'm willing to trade instead of being reactive and needing like that one candle middle of the morning to bail us out. Short term, or at least recently, we've been getting a lot of these like one or two candle capitulation bars. So something like this 1105 bar, right? Something like this 1130 bar that we got lucky on the other day. And that could be a little bit frustrating, right? But it also tells us that we probably don't have trending price action, and we want to be pretty patient until we get a clean narrative. So an inside bar there is a candle that makes neither a higher high or a higher low. So it's completely confined inside the previous candle's range. Where did all my examples go? So here, right, is Tuesday's range. Uh, High price 180, 116, low price there of 175. And then yesterday's high price, right, 180.44, which is less than 181.08. And then 176.88, which is bigger than 175, right? So all of yesterday's price action is inside the previous bar. Does that make sense? No, I will trade, but it's effectively telling me that I need a breakout opportunity, right? So an inside bar tells me it's consolidation. And what that means is I need to see then a breakout from that consolidation zone. So I would need to see a breakout then above that 181 or under, right, that 175. Does that make sense? All right, beautiful here, team. So we got, I don't know, 12 minutes here till market open, give or take. I'm going to go make myself a quick cup of coffee, spend a few minutes here visualizing a successful trading day. And then we'll jump back on in a minute or two. And we'll do a quick little rundown here going into market open. So be back in a few minutes and we'll talk then. All right, so let's get after it, right? In general, we're still stuck inside our periods of consolidation, right? Kind of like pseudo channels here, right? Maybe rising wedges if we want to be aggressive with our language. But we're looking for a consolidation breakout here at this point, and can be relatively cautious, right? Until the market gives us that opportunity. We're also creeping up into the futures roll, right? Which maybe not here yet today, but tomorrow and Monday is going to give us a lot of potentially false signals, right? Or false breakouts. And what we want to sanity check here, right, is what the quality, right, or conviction of those breakouts are. And then basically using, right, kind of bigger picture targets, right, to justify, or I should say to define, not to justify, but to define that we are out of this range bound market. We're creeping up to kind of a weird part of the calendar, right, from a stock market perspective. We're going to have like back to back, quote unquote, and it's a relative, market holidays, right? So markets are going to be slow next week for Juneteenth. That's a Thursday, so kind of like a middle of the week holiday. That's going to slow things down here a little bit. And then as we creep up towards that 4th of July week, right, that's also going to be relatively slow from an economic calendar perspective. Those are the two closest, right, holidays that we get, or two closest independent holidays, not counting Christmas and New Year's Day. So generally, right, markets like to slow down. People take holidays, right? They do whatever. So I think we're gonna have maybe another couple days of consolidation here, and then eventually we break out from this range, have like 2 weeks of clean tradable price action, and then catch your breath type moment, right, for a few more days prior to moves being aggressive. Besides the candle shapes, you should be able to hear me, I believe. If you just might need to refresh. Um, but hopefully, right, we can find ourselves some clean PA here today. And once we found sort of that trend, right, or trending action, can kind of go from there. The one change, guys, I'm be making from an operational perspective here this morning is I'm just going to be trading CL instead of MCL. So the cost per tick on MCL is $1, or $1 a point. Sorry. So I can stay within my size requirements while still saying trading the contracts that I want. And hopefully, right, that gives us still sort of that flexibility. So not going to be changing anything else besides that. But I just think it's going to be a little bit ridiculous to be trading like 10 CL or MNCL contracts, right, and have $15 worth of risk. So I'm going to be trying to play around with this a little bit. And again, right, I don't expect this to change anything from my perspective besides that. So yeah, let's see how the day shapes up here. Let's see where the momentum kind of creeps in, and then can go from there. We should have a relatively clear economic calendar, right? From that perspective, we've got no data here at 10 a.m. Who knows what Trump and his goonies, right, are going to be tweeting out here today. But hopefully we can take advantage of whatever enthusiasm is in store and then go from there. The other thing that I want to play around with a little bit here is like first candle of the day type trading. So like on those days where you get those big gap downs, or even big gap ups, right? You tend to get that first candle to be a little bit of a reversal. Again, something to back test and play around with here as we look for early momentum strategies to take advantage of, but something that I continue to kind of play around with, right? And hopefully we can find or continue to basically develop our edge. All right. Besides that, not too much else. So let's see how the day shapes up. Let's see where enthusiasm is, and then it can go from there. How's everyone feeling today? Good, good. I'm excited too, feeling sharp too. Maybe didn't get a perfect night's sleep, but that's fine. There's a big forest fire not too far away, and well, relatively big, and air quality's gotten real bad. So if you guys hear me starting to get a little bit like scratchy in my voice, that's the that's my excuse. Great to see you in here, Corinna. All right, so okay start, kind of a bit of a divergence between NQ and ES, right? So let's see which one's actually strong or which one actually has the momentum. But if we're getting a divergence, right, between our leading names and our one index and the other, what does that possibly tell us? So if NQ is holding up as a strong, call it normal body bullish candle, and ES is holding up as a second most bearish, what is that maybe an early indication of? Yeah, right. Possibly indecision, right? It's probably the best description. We're getting a divergence, right, between two, or we're getting one story in one name, right? One story in the other. Probably not the most consistent thing for us to fall in love with. So I would say that that's probably a better indication of like consolidation than it is of anything else. And we'd like to see those stories sync up, right, and get more consistent prior to being aggressive. So let's see which one wins. Maybe the 5 min candles, right, will give us a slightly more consistent story. I think it also, right, with it being a diverging market here this morning so far, probably means that the average move, right, or the size of the move that we're going to get is going to be a little bit more conservative here today. So again, let's see if we can get that consistency here. Well, I haven't finished testing it all, Jay, so I haven't implemented anything here yet. Just been playing around with it. Yeah, basically, but yeah, it'll be on all the tickers that I trade. Or like I'm looking for the same pattern on all three, right? So I'll try to get that maybe done next week or so. So I'll have some time this weekend, and then obviously it's going to be a weird week next week, so I'll have time uh, Thursday through Sunday as well. If you go find an Airbnb somewhere and just go back testing. Okay, so inside bars there as our second candle of the day. Yeah, very slow start here. First opportunity for a breakdown on ES. Let's see if that's the case. The theme we've seen here recently, right, is fake out lower, fake out higher, then the move happens. So again, it's just a market we're going to have to be a little bit slower on. Uh, and still the same thing like yesterday, right? I'm looking for those breakout trades here primarily, or that's going to be my main focus. Okay, nice little candle there. Not a strong enough candle shape, right, on CL. And then on NQ, right, we want a consistent textbook breakout. We don't want to get faked to death, right? So again, base expectation is fake out until we get a proven otherwise. And we're looking to see that proven otherwise first, right? Still not a breakout. Not a breakout. Excuse me. Got hiccups all of a sudden. Okay, so CL is going to be of the focus here. Okay. So let's start to map this thing out here. For now, we're looking at the pullback entry technique. It might end up being the aggressive. Same target on both the 3 and the 5, so it's not going to make a difference. All right, so now we're looking for the pullback entry technique. Stop loss here, right, is going to be 67.23. I'm keeping my max risk, right, to be about $300 here. I'd be looking at like 4 contracts, right, something like that. All right, so let's be patient here. This is our first opportunity inside the entry zone. Let's make sure that it finds support. $43. Honestly, might have just missed it there. If this thing sets up on the 5, we're going to be okay as well. NQ, not the volume we need. Same thing with ES by the looks of it. Okay, so back to watching here. So reference price, right, 67.29. Stop loss price, 67.23. $30 seconds. Okay, close. Bugger. So it'd have to now be a 67.32. Okay. Reference price, right, of 36. Does feel like a little bit like I maybe missed my entry there. It hovered at that 29 for just a moment. If it breaks out on some volume here, then we could start to target a larger move, right, towards like 68. ES and Q not missed out on anything here yet. So there's that increasing volume. Bit unlucky with that first one. Nice work, Nick. Yeah, you're in great shape here. So look to manage this position here pretty well. You got that move happen pretty quickly. Great entry, man. Great entry. So let's see if we can close up strong next few seconds. I'm, I'm cold. Ugh. I honestly must have woken up in the middle of a sleep cycle here today. Annoying. $6.47, still early. And not a super strong candle shape there, but held higher highs, good volume profile. Risking $160. Not a bad risk reward. Nice. Well, hey, glad you're green. Glad you didn't panic and you made a good decision. Okay, so still watching here. It's finding support pretty well. Where's the view up? Well, underneath. Kind of 50-50 on this. Yes, might be giving me probably not going to be enough volume. Hey, nice work, John. Hey, you got the entry I should have probably gotten. All right, so on the 10 min, right, we could play this using the pullback entry technique. That would be interesting. On candle shape there. Possibly do that. Baking in the fake out. Maybe a bit aggressive. 67.28 would have to be the stop loss. Yeah, I am looking here, guys. I am looking. Spread of 2 cents is maybe more than I would expect at the moment. So wait it out. I think I can get a slightly better price. The risk reward here is off. It would need to be there. 67.33. Again, yeah, it's the right idea. Just can't find a high conviction entry here yet. $1.20 to go. Might get outlier volume on the 5-min. Almost. Did I justify a move towards 68? So that'd be a stop loss there of 38. Let's wait this thing out on the 5. Let it close. So this is just a 2-candle confirmation here, right? Here's your breakout and hold on high of day. Here's your strong candle confirming strength. 67.49 for now would be the stop loss. And alternatively, right, maybe able to get away with the pullback technique. Now on the pullback technique, we're going to want to see probably a 38 or so. So aggressive would still be better. Now again, back to looking at a 28 stop loss. $28 to $45 right now would have to be like a 1 contract play, right? This is not worth it. So either get things to tighten up or pull back deeper. 67.42 could be interesting. Again, back to watching maybe for this 28. Okay, so watching here again, stop loss, right, 28. Go back to above being 50. So now back to stop loss being 42. I'm change my mind like crazy here. All right, so let's see if we can get a good little reaction. Looking at 3 contracts right now. Okay, so gentle pullback, right? Gentle pullback is what I'm looking for here around 50, 67.50. Okay, still watching here. No 10 a.m. data today. Okay, give this 10 seconds. I do think at the 10 a.m. candle, right, we have a chance for a little bit of an overreaction. That's why I'm waiting. Okay, so watching closely here, team. Okay, so I am in 67.50, 67.50, 3 contracts. Stop loss 67.42. Okay, so let's see if this thing can keep going here. Okay, so far so good. There we go, team. There we go. Very good start. And let's see if this thing can keep breaking out here, right? And giving us a little bit of momentum, but really, really well done here. We'll not let this trade go red, right? No matter what happens here. I will not let this trade go red. I'm up 1R, so I'm not going to size up more than that. Let's see if this thing can give me a little bit more oomph here. There we go. There's 540. 600. All right, let's see if we can get a quick little pop here through that 70 and then think about possibly getting out of this position. I'm always a little bit hyper paranoid about the CL fake out type price action. Okay, watching. So far, so good. 480. Let's go, Nick. Congratulations. Huge day, man. All right, guys, watching this breakout here through 70, right? This is what I'm judging. A quick pop through that's going to be my reason to close and get out. So if we go from like 70 to 74, right, in a second, I'm going to get out and take my 25 cents. So watch here, right? This is going to be our moment. I believe in you, CL. Okay, so watching. I would like to see it break out over 70. There's 71. Let's see if we can keep going. Like to see it break over 100 now. I'm going to speak it into existence. May as well be more ambitious. All right, so let's see if we can keep going. Watch this candle close here, guys. Watch this candle close. Good volume. It's a strong candle shape. I don't theoretically have any reason to get out of this. But I have a little bit of paranoia and want to make sure I'm walking away with a nice green day. Come on. Okay, keep pushing. And trying to get over 70 here. That's our psychological barrier we need to clear. Both, I think, from our perspective, right, and from the market's perspective. Hey, nice work, Norm. Nice work. Come on, find your support. Ooh, okay. Didn't like it going from 66 to 60. Oh, let's see if this thing can keep climbing, but that was a bit maybe of a warning shot across the bow. Okay, watching, watching, watching. Not yet, AJ, but it's because I'm looking for an exit already, right? Like I already have my plan on what I'm going to do to exit. So I'm not going to complicate that here. Come on. Okay, so watching here carefully. This should be our little bounce spot here. No panic here yet, right? No panic. Come on. Come on. Okay, a little inside bar. Beautiful. So let's see if it can go. It's got to push, got to push, got to push. I don't like that an early little move higher and then pull back. And it no longer feels like it's showing me the strength that I want. So let's see if this thing's got some juice left in it. Then push back up to the 60 handle. Come on. There's been no pyramid here. There's been no nothing, right? It's been a very conservative trade. Um, I'm looking on an exit on an aggressive, like overreaction move higher. I don't necessarily have a specific target in mind, but I know what capitulation looks like, right? So it's going to be like an overreaction move. So that's kind of what I'm looking for. But here's the thing though, right? Like with that inside bar being the most recent candle, I don't on paper have any reason to be afraid of this. The only thing I don't like, right, is the pullback off of 70. right? So we've pulled back a good chunk of the move here. But it's like it's just an inside bar, right? So it's kind of like false bravado from the Bears. Again, let's see if we can see a pop here. Come on, CL. Okay, that's not a great feeling. Come on. Bounced right off of 50. But it feels like the enthusiasm lower is probably better than the enthusiasm higher at the moment. Give this as much time as I can, but that's a relative term. And just a little double inside bar. Which is neither a good thing or a bad thing right now. Kind of a no man's land thing. Yeah, this has got to be its moment. Gotta push, gotta push, gotta push. Doesn't feel like it wants to push. Come on. 56, get over. 57, come on. 8. I'm teaching my nieces and nephews how to count. All right, get over 60. There it goes. That's a nice pop. All right, more. Beautiful. 65. 67. So looking here, right, for a big pop higher. That's going to be my exit. 68. Big dump. All right. That rejection, not feeling good. So we're going to look to get out as my P&L is increasing here now. That's too big of a rejection. That was 10 cents in a moment. Come on. Give me a pullback here. Get over 60. Get over 60. Give me an explosion higher. Okay, watching. Quick pop here's going to be my trigger to exit, guys. Quick pop here's going to be my trigger to exit. Close, we're close. Watching. Give me the pop. On 60. Okay, watching here very closely, team. Watching here very closely. Come on. This thing is teasing me a little bit. Come on. Yeah, it's like 68, 67. It keeps getting stuck at, but the range keeps getting smaller and smaller. All things considered, an exit here wouldn't be a bad one. Okay, so watching here. Give me that pop. Breakout and explode. Come on. Come on. Okay, watch this last candle here. Can increasing volume held high. It's not the strongest candle shape. Come on, give me a pop. Went 4 cents in a second. Doesn't exactly feel strong. Kind of feels like the moves lower are happening faster than the moves higher. All right, come on. Patience is a fickle mistress. Come on, push. We have nat gas in a few minutes. I reckon I kind of want to be out of this by then. Stuck. Nervous. I think it's the thing that's making me anxious is that it gets stuck at the round numbers. That makes me a little bit apprehensive. All right, this has got to be your moment here. Come on, CL. Goes again, 5-cent dump. Fast moves low, slow grind high. Fast moves low, slow grind high. Feels like a disproportionate mental capital ratio. I don't like that. Worst price to have stalled at here again. Interesting from NQ. The worst reaction. Weak volume. Maybe a fake out low. Nice work, Rusty. All right, come on, pop. Probably had a few warning signs in this. Took on a better exit. Kept going 65, 60, 65, 60, 65, 60. I'm a tough spot because I haven't, there's no like technical reason for me to have gone out of this position here yet besides just like paranoia. But we've also been in this now for a little bit. No longer really behaving the way that we want. Okay, watching, watching, watching. Oh, the market loves to make us work, huh? All right, back to that 60-ish handle. Let's see if we can get a pop here. It's tough to want to trade or trust the move when it's not invalidating you, but also not like telling you, hey, this is the best move of all time. Kind of get stuck in this weird no man's land. Okay, so watching here, guys. Watching. Find me the little aggressive pop here to get out on. We're close. Why are you getting sticky again here? Consolidation for a pop higher, or is that there's just no participants? Uh-huh. Uh-huh. Give me one pop, one big pop. Yeah, it feels like it, but it feeling like it's going to do it and then making that move cleanly is a whole different story. Retested 50 a couple times, but it's kind of just in its midpoint, right, from its high of day price, right? Because it got went like 70-ish, right? We're kind of just stuck in the no man's land middle. And each pullback feels less and less trustworthy. Come on. Come on. Go. 5. Keep pushing. Again, it just falls out. The worst feeling. Come on. Don't like the spread widening there either. That's not great. All right. How many times can price stall here? Yeah, I'm a bit paranoid about that too across the board. Ah. See, that's the worst feeling, right? It takes so long to climb up and then it flushes 5 cents so easily. Oh, it's the worst like segmented volatility. Kind of bullshit. And gets back to that 60 so fast. Oh, so annoying. Hey, gotta go. Gotta go. Come on. Come on. Come on. Come on. Come on. Trying to fuck with us. Nice work, Corinna. I'm thinking about getting out here too in a second. Well, the reality here, right, is that price action just has not moved very much, right, since our entry. So it's now just making sure that we lock in some profit instead of getting greedy. Again, getting strong candle shape, strong volume profile, holding higher highs. So I think I could still get more out of this, but how much do I want to squeeze? There's 72, 71. Come on. I was just a second late on that. Come on, come on, come on, come on, come on. Okay, guys, I've closed at 69. I have closed at 69. I'm going to take my 600 bucks all out. Woo. Working man's trade here today. Maybe could have gone a little bit of a better exit there, but I'll take my 570 bucks. Okay, now I left a lot of money on the table. But that's okay, guys, right? That's okay, right? We closed as our P&L was increasing, not decreasing. Market doesn't owe us this. We can take responsibility of our own decision, right? And then inside the journal, right, you track, okay, close it a little bit early, right? Again, guys, we didn't leave too much money on the table, right? Maybe 10 cents. That's not a big deal, right? Don't need to beat yourself up over that or chase, right? Another entry here to do anything crazy. Well, there's kind of a twofold part to that there, Jen, right? So we're patient because we're defining what we want to see post entry. So we know what we're being patient for, right? We either get the candlestick reactions that we want or we don't. If candles continue to tell us strength, we should look to maintain our position. If they tell us weakness, right, it's time for us to get out. I didn't do perfect on it, right? Because the candle that I closed on, it didn't tell me any reason to have actually gone out of that trade. I'm more kind of just like traded my PNL. So maybe a part of that, right, is because post entry, right, this was our entry candle here, one breakout, and then 5, 10, 15, 20, 25 minutes, right, of price action basically staying still. So my thesis was correct here, all things considered, got a pretty good entry price, but it wasn't the perfect entry because price action hung out at that zone instead of breaking out away from it. So I think to a certain extent, my entry timing here probably let me down just a little bit. No, we've just closed this trade here about 5 minutes ago, John. So from my like self-assessment here, right? Entry timing, minimal drawdown, take profit timing, right? Closed as P&L was increasing. Stop loss location, right spot, right? Our stop loss was 100% the correct spot on this trade. And then the psychological impact I wrote down as medium, so in orange, um, just because of how long it took for that breakout to happen, right? So there were definitely a few moments where maybe a little bit of nerves kicked in or like a bit of anxiety that maybe I missed the move. If I'm thinking about specific examples, right? It was like on those bits of price action where we got to like 67, 65. It took 2, 3 minutes to get there. And then we went from 65 to 58 in 5 seconds. So those definitely made me feel a little bit nervous, a little bit not want to say panicked, but a little bit like maybe locked in on the P&L at that point. And then, yeah, probably didn't close my position at the right opportunity. Now, I did close it as it was increasing, right? So I sold it on the uptick, which is a positive, but about 10 points too early by the looks of it. Now, what was my entry timing here? So yeah, it was a 35-minute trade, right? That's pretty long. I think that's probably where the mental capital got kind of used up here a little bit. Maybe Sean. I'm not sure. Still got a little bit of time here before the day is done. Still maybe a little bit yeah, I'm kind of maybe in Kiki's mindset here a little bit. It's a solid trading P&L day, $570. I'll take that per account. I think more than anything, what I like here today is A, felt very disciplined, right? With how I traded. I didn't chase, I didn't do any bullshit here today. So I think that's a very positive, right? And I also I'm gonna phrase this carefully, but I didn't make any panicked based decisions. I didn't panic close that trade on the pullback. I trusted my thesis. I evaluated each candle individually, right? And was able to continue to trust my trade, even if timing wise, right? Maybe it wasn't perfect. I also think that because it took a little bit of like a little bit longer for that move to come together and it required quote unquote like more focus to execute it, right? Or more like studying to execute that trade. Um, maybe my mental capital got like more drained, right, than other opportunities. And yeah, 100%, right? This was a trade. Hey, if it's the first one is strong, it'll give us another chance to enter. As much as I would have loved to have had Nick's entry, I wasn't quite ready to click submit at that moment. So no issues there. Yeah, I think all things considered, guys, that was a pretty good trade. Like, although we maybe closed it a little bit early, closing it where we did, all things considered, not a bad decision. I reckon I've been quite stressed out on this pullback here now. Yeah, I think across the board, I'm pretty happy with that trade. That was a really good process. So let's just execute the edge, do the boring basics right. When stressed, focus back on the boring basics. Take it. Okay, so now I just need to take a screenshot here of this. Got out what 35. Um, Okay. So what I'm going to be trying to do here, you guys are kind of seeing at the moment, but I'm going to try to be journaling basically as my, or once I'm done my trades, right? All right. Today's the 12th, right? Yeah. So Jonathan, sorry, I missed your question. What do you mean by your statement? So for your fib retracement to calculate your RRR, what are your setup? I don't know what that means. Can you please rephrase your question? Oh, well, so with the Fibonacci tool, right, is it's a ratio. So what this tells me, right, is that this is zero, or this is 23.6%, right? So it's going to be 23.6% above the zero line, right, relative to the one. So If I drag this out, right, that ratio will remain the same. If I make it tighter, right, that ratio will remain the same. So it's just about drawing it from your profit target to your stop loss price. And then is your risk reward, like it's going to help you visualize your risk reward ratio. That's all it is. That makes sense? Maybe not a very good explanation. Uh, yeah, Antimus, man, you asked the same question there yesterday, right? Give me 5 days of me following my rules, so 4 more trading days for me to continue to trade micros on NQ and ES. The objective, right, is for me to cut my risk in half here while I just get back on track. So same question as you asked yesterday, man. Well, we talked about this at the start of the day, right? MCL moves $1 a tick. So I can size my positions with CL to be able to trade at half risk without any issues. So the reason I'm trading micros isn't because I want to trade micros, is because I can trade or get that half risk number really easily. All right, guys, any other questions here? I'm not going to place any other trades. I'm happy with the day. 1 for 1, baby. Nice, Jay. Look, that's the unfortunate reality. It just takes time and it takes practice. A little bit of repetition will get you there. And I'm just gonna. Cool. Well, I mean, the straight line continues. The nice little P&L streak here continues. I appreciate that, John. I'll do my best to try to beef those up here a little bit. Honestly, just analyzing my trading and studying that a little bit more has been a bit more of a priority than making those videos in the last couple days. but I'm gonna have a bit of time here, so I'll be able to beef up and finish up all the remaining scripts that I have. But yeah, I mean, unfortunately, that's kind of what it is, right? Sometimes you need to see content from multiple different angles, and with like me phrasing it in different ways, to all of a sudden like arrange the bits of information in your head appropriately. So sometimes that just takes a bit of time. I also don't think that there's a like I would let's phrase this better. So I would imagine that there's a very strong correlation, right, with uh time in front of the screen, time practicing, right, asking questions, and then videos making sense, right? So it's like the more examples you've seen, the more you've seen me talk about it here on a day-to-day basis. I think that adds context right to the videos as well and improves kind of like base understanding. So really what my objective, right, with those videos is obviously to speed up that process as much as I can. So hopefully we can continue to make some good content there. Yeah, I'm not going to stream on the Friday. Markets are closed on Thursday. Pretty much anyone who's anyone is going to go take that Friday off and turn it into a long weekend. So as much as I aspire to be a Wall Street big shot, I'll go yeah, go spend some time somewhere. Maybe go drive up, see my dad or something. All right, how we feeling here, team? Any other questions? Have one green today. Everyone feeling calm today? Good, Rico. Good. Nice work, guys. Good to see. Right? And it's stacking up those green days. It adds up really fast, right? We made $120 right in 35 minutes. That stacks up fast. Yeah, I had some issues with TradingView here too recently, Rico. It's like would have been on Tuesday. We had that big flush, right? As markets were selling off, as they were dumping, right? And I was in a trade. I looked to close it. The order didn't submit. It was kind of like hanging out in the trading view universe. And then it submitted, closed my trade, but I clicked it twice, and then I opened up a long with 3 contracts to the other side. I ended up doing a sell order of 6 instead of a sell order of 3. And it was uh tumultuous to say the least. It's about 3.5 to 1. About 3.5 to 1, right? 236, right? So 23.6%. Right. So that's what the 236 is. It's the percentage, right? So divide that by 100, and that's your risk reward ratio. Yeah, you too, Jonathan. So, final call for questions here, team. Final call for questions. Yeah, I mean, if you're still in that circle, Rico, I mean, we talked about it last week, right? And you just faded the IPO. I would be very careful, right? Trading those types of contexts, they can be really challenging. Um, Tesla, I would be afraid to swing trade here in the middle of this range as long as we're still in like a heavy news cycle. So I would want it to be 300-ish or better as an entry. And then to the downside, right? Again, I would need it to be higher, 370-ish. Or just too much in the middle of its monthly range, right? In the previous month's range. So it's not a good risk reward ratio in either direction. All things considered, it was pretty good close. No, I did not. I don't do banking stocks. No. So final call for questions here, team. Final call for questions. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Good, controlled, calm, casual trading day. Happy with how we traded and looking forward to seeing what the market has in store for us tomorrow. Expecting it to be, I don't know, maybe a little bit of a slower day here. We'll see if that's the case. But all things considered, good trading day. Happy with how it went, and expect a recap video at some point here this afternoon once I have a bit of time. But same deal like always, right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. And in the meantime, have yourselves a great afternoon, and I'll see you guys tomorrow. Peace.